Hello, this is Elaine Wu with the BERYL Consulting Group. Today we are joined by Melissa Otto, Head of Visible Alpha Research at S&P Global. She focuses on AI applications, mega-cap technology trends, and how data platforms like Visible Alpha and Cap IQ shape investment workflows. Melissa brings over 20 years of experience as an equity analyst and portfolio manager with a background spanning global technology and consumer sectors. Welcome, Melissa. Great to have you today.
Hey Elaine, it's great to be here. Thank you.
So, Melissa, given your experience across both investing and data platforms, let's start by getting your perspective on how AI is actually reshaping the investment landscape. So, when we talk about AI in investing today, how should we think about where real alpha is actually being created? Is it more at the infrastructure level or at the application layer?
I think we should take a step back and see actually where we are at the moment. I think this year is going to be a very important year for the AI space and the overall AI trade. First and foremost, based on Visible Alpha consensus, the mega cap technology stocks, the quote unquote hyperscalers that are essentially laying the groundwork and driving a lot of this investment, are expected to spend capex of over $650 billion this year, which is no small amount. And a lot of that is going toward data center expansion, data center conversion to enable the compute power to essentially increase significantly to enable all of these terrific potential generative AI applications to work seamlessly. So that's all getting built out. And we've got next year. And I think, as we continue to see the compute increase, that's going to enable a lot more capabilities to come to life. Where we are at the moment from an investment standpoint, we're seeing very significant demand increases, which is ultimately leading to very significant price increases for memory, components. I would even throw certain commodities in there. We're seeing demand for both energy and various metals and materials that are benefiting from this capex cycle. These are just a couple of areas that are benefiting at the moment. Then I think as we look further out, things like land development, real estate in certain locations, even as we start to look further out and longer term, things like new AI startups that may end up going public, new applications, new ways of thinking about the space longer term. Many of these companies now live in the private markets, but longer term could end up going public. So those are just a few things that we're observing in our data.
And building on that, how much of AI's edge in investing actually comes from the model itself versus the quality and structure of the underlying data?
Right. So I would say first and foremost, the quality and structure of the underlying data is very important. Garbage in, garbage out. I mean, that's sort of data management 101. And I think anyone that's in the investment industry is going to be very sensitive to the quality and accuracy of the data. They're going to know very quickly whether the data that's being output from the actual model or the GPT, whether or not that is something that they can rely on. We've seen some good examples of whether it's ChatGPT, it's Claude, or some of the other open source models are all providing somewhat different outputs and different ways of integrating the data and looking at it. I would say they all have pluses and minuses. It just really depends on the user's needs, what they're looking for, and what their actual investment approach is, what their workflow looks like, and how they intend to leverage the actual outputs. I would say there's different calibrations of what makes a great model. At the very foundation of that, great data, clean data, high quality data is really important.
And so once we understand where the edge is coming from, the next question is really how that translates into practice. So where are you seeing the biggest real productivity gains from AI in investment research, and what does that actually look like in terms of how workflows are structured in practice?
So I do work with a lot of different AI applications and AI uses within the actual investment workflow. And I think one of the most exciting areas is around summarization. Summarization is a painful part of the workflow. It's very time consuming. It requires a lot of grunt work. And I think what we can do, particularly with great domain knowledge and keeping a human in the loop, is really being able to take, for example, within S&P Global, we have Pronto NLP that goes through and does a terrific summary of the earnings call and uses the actual investment framework to go through, look at the segments from the filing and assess, essentially what is being reported. And if the company states so in the actual filing, what the guidance looks like. And then what I'll do is have someone from my team go in and take a look at that, make sure it looks okay, and then listen carefully to the Q&A. So we can save a lot of time actually doing the more basic standard part of the process. And then I can leverage someone on my team to do the more analytical or creative part of it, where there's something maybe a little less standardized. So I think, that model can be applied to other areas too. If there are documents that we want to have searched or looked at, sell side reports, for example, things like our document viewer do a pretty good job of that. What that ultimately enables the user to do is save a lot of time and look at a lot more companies, and so they can get a lot more information. So for me, I really appreciate that, because I'm trying to look at the whole world and understand what's happening. And just this past earnings season, we had 4 companies reporting at the same time, these 4 hyperscalers, and in a very quick amount of time, I was able to pretty rapidly kind of go through and see, okay, what's happening in terms of the follow-up, being able to look at the transcripts and look at those Q&As and understand those summaries, much faster amount of time than I would have if I was going through each individual one manually. And so I think, that's just a simple example of where AI can come to life. Also, just search and being able to put capabilities together within a ChatGPT, just asking questions without having to scroll through loads of Google lists, I think is maybe another simple way that an investor can certainly do that.
Right, especially when there's extensive information in front of you, you really have to use that AI to increase your efficiency, your productivity.
Exactly.
And
I mean, the
so,
other thing I really love about leveraging, whether it's ChatGPT or Claude, for asking you questions, it sources from a top tier source or an expert, as opposed to just using a search engine that tends to rank results based on sponsorships. People will actually pay to have their actual organization or their results go to the top. And those organizations or individuals may not actually be the best source of that information. Whereas I've noticed that within the GPT world, it is actually pulling from higher quality sources. So I feel like as an investor and research analyst, I'm getting a better picture of where the data is coming from and who the actual source is.
and so speaking of from being an investor, so when you talk about AI, it also raises the question of how to distinguish between what's real and what's just narrative. And so when a manager claims that they are using AI, what makes you believe that it's a real edge rather than just a kind of rebranding of the traditional quant methods?
Yeah, I mean, I think it depends on the workflow and the investment style and approach. One of the things that we are seeing being used a lot is, seeing AI used a lot for is vibe coding. So I think being able to code or being able to do very basic parts of coding using an agent to build up to the actual grunt work of a quant strategy, and then to lay on top of that a much more creative and unique algorithm that could be systematic. And that may be one way that a user may find that approach interesting. In addition, if you're a fundamental bottom-up stock picker, that's how I was
Mhm.
trained. Like
Mhm.
I was saying earlier, you have these tools at your disposal, whether it be like I have ChatGPT on my phone and I'm constantly asking it questions, being able to integrate different tools from CapIQ and being able to go through documents or things that would normally be very time consuming. It's a great time saver. That time savings enables the research to ultimately become better because it means that the user can look at a lot more data. They can look at more companies and develop a much deeper and broader perspective than they would if they had to do everything manually.
So as AI becomes more integrated into investing, where do you think human judgment will remain irreplaceable?
Human judgment is really important to be kept
Right.
as part of the process for right now.
Mhm.
At some point, the model may become so good that the human can start to move away from certain parts that are a bit more standardized. But, for right now, I think it's important for the user to, I would say, keep someone in the loop that is familiar with the companies, familiar with the industries, so that if something unusual is getting output, if something unusual is happening, they're going to spot it straight away. They're going to say, this is not what the company
Yeah.
is reporting. This is not indicative of the industry. This is not something in line with what we're used to seeing. And they can pull back and go in and take a look at the source of that data and understand where that's coming from. Why is it an anomaly, or is it simply a mistake or a hallucination? And I think that is very important. Areas where we have noticed that it's important to keep a human in the loop are, for example, questions, any area where there's Q&A, for example, where there is like a more creative, non-standardized process, but where, we've noticed that the results are very high quality, tend to be around the filings. They're following SEC guidelines, FINRA, and GAAP guidelines. So I think those tend to be pretty standardized. I would say the hit rate is much higher than with the Q&A. Q&A tends to be misunderstood, or the context isn't grabbed completely. Sometimes numbers come out a bit awkward. So that's where having a human in the loop is really important. That's just an example.
It's a very classic example, I would say.
Indeed,
Um,
indeed. Where anything
mhm.
is standardized, where you have like clear standards and guidelines and a well understood framework, AI does a great job. When
Right.
it's a bit more creative or non standardized, that's where the AI can break down. And also, I think AI isn't great at forecasting. It's not great at
Mhm.
speculating. It's great at
Mhm.
present tense and past tense. Where is it right now? And what has it been? It likes facts.
Thank you, Melissa. This has been a really insightful discussion, especially around where real value is being created in AI, how it's actually being implemented in investment workflows, and where human judgment continues to play a critical role. Thank you so much for sharing your perspective with us today, and thank you to everyone for tuning in to BERYL ELITES.
Thanks so much.